Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me today. This video is being recorded on the early evening of Tuesday, January 14th, 2025. And yes, I know this is a late edition of Macro Mondays, but there's a specific thing I want to talk about in macro, and I'm going to get to that in the next slide. So, without further ado, let's get right to it. Okay, so starting off here, we have the Fed funds rate here, yield curve here. This is the 10-year minus the 2-year yield. Gold against the stock market, 10-year yield here, and the stock market here, the S&P 500. These point to the declines in the stock market. Now, what I am getting at here and what I am thinking is that the major turning point for gold and precious metals this year, I think it's going to be when we see the 10-year yield peak. And I'll tell you why. Okay, so before I get to that, we can look at these vertical lines here. These blue lines are when the Fed started cutting rates. So blue is when the Fed started cutting. This one's also when the Fed started cutting, but we didn't really have a real inversion of the curve there, so that's why it's a light line. So we can see here, that's when the Fed started cutting. The red lines are actually when the 10-year yield peaked, I should say. And as we know, when the yield curve steepens, it's inverted, it comes back, it steepens like that, that signals a recession. And when that happens, or as it's happening, typically you get gold outperforming the stock market, as we saw here, and again here. And as we're slowly getting to that point, gold against the S&P, that's got to break above 0.50. Again, that would just be a massive thing for precious metals. We'll look back in 5 years and say, boy, that was the real turn. So that's what we're waiting on. Yield curve is steepening. Probably need to see that continue and steepen a little bit more aggressively. That could signal that we're really moving closer to a recession. And what happens when that happens is the market starts to price in more rate cuts. And the Fed will have to reaccelerate its rate cuts. And around the same time, in that scenario, you are going to see the 10-year yield peak and then reverse and decline. And typically, and again, the vertical red lines here mark when the 10-year yield peaked. Yeah, peaked, and of course it started declining after that. And so let's see how these peaks in the 10-year yield coincide with peaks in the stock market. So here we are. Here's one at the end of 2018. You had this peak, and that was kind of in tandem with the market declining 20%. You go back to 2007, and the 10-year yield peaked. This was kind of a double top here. So you had this peak, then it started moving down. I'd have to zoom in, but kind of, I think, a significant drop. And then the stock market peaked. Then, of course, we had that nasty bear market. So going further back in time, the 2000 to 2002 experience, you had this peak here in early 2000. This might have been around the time of the tech bubble, or maybe this peak was in January. Again, I'm sorry for not zooming in. But again, peak in the 10-year. That comes down. You start to have a big decline in the stock market. You had a couple of bear market rallies here. But after this bear market rally, at the end of 2001, the 10-year yield also increased at the same time. But you had another peak here, so that's coming down like that, and just another nasty decline in the stock market. Go back to the mid-90s. The 10-year yield peaked, it came down, but it was a soft landing. It was a soft landing in the stock market, in the economy, and we can see the yield curve here. Look at the action here. It never inverted. It never really steepened. It's steepening a little bit, but this is kind of meandered for a couple years. It came back down, so that is why this peak here didn't signal a major decline. Now, another one here, we can see the peak here in 1989. The market went up a little bit more, then it went sideways. The second peak here in the 10-year, that was right in line with the recession and the market dropping 20%. So we already know the real significant developments for precious metals. To repeat myself, that would be you see steepening of the yield curve. That's what it's starting to do. And at the same time, you get, when you get more steepening, more acceleration, that leads to more rate cuts because the market is sensing economic slowdown, recession, etc. And so we are getting really close to that point. And at the same time, when that happens and you get those cuts, again, that's when gold outperforms the stock market. We can see these examples here. And that's what we're setting up for. Now, the different thing now is people are worried about inflation, stagflation. I mean, the 10-year is rising up here. I mean, it peaked here right about at 5% or maybe just a few ticks below. So it has been moving up aggressively so far, but it hasn't made a higher high yet. So I would look for either a double top here or you get some kind of a higher high. And so this is important to understand. The reason that we're not just going to have runaway inflation or the 10-year yield is going to go up forever is because the economy right now is too weak and it's too sensitive. And once you get these interest rates moving higher and moving up to 5%, maybe it moves a little bit above it, that eventually is going to damage the entire economy. So that is how inflation or stagflation eventually leads to a recession. You have sticky inflation, long-term interest rates, the 10-year bond yield, they're trending higher, but eventually they get to a point where it tips everything over. It really impacts the economy. People are cutting back, they can't spend anymore. Debt markets start having problems. And so eventually it's kind of like a boomerang. I mean, this is moving up, and it is going to impact the economy negatively. And again, I don't have a crystal ball. We don't know what the tipping point is going to be, but eventually at some point this year, this is going to peak. And so when it peaks and when it rolls over and comes down, that's going to be the really, really major catalyst, I think, for precious metals to really, really take off. And so this is a similar chart, but just to look at everything in a shorter term sense. So here we have the 2-year yield. Here's the 10-year yield. These, I pointed this out in a previous video. The yellow highlights the 10-year yield moving up and that hurting the stock market. Again, we can see here, market went down. Here, it's close to 5. It peaked here, nearly at 5%. Stock market selling off. Another move up near the high. Stock market selling off. But I pointed out recently, we're moving up again, but the stock market's moving up. But maybe until now, maybe we are starting to see, as this gets closer and closer to 5%, maybe it's starting to hit the stock market. And who knows, maybe this could be some kind of a significant top. So that's what we'll have to continue to watch over the days and weeks and months ahead. If the 10-year yield keeps rising, if the market's peaked, that's an important signal. Of course, here's the yield curve. This is increasing, it's steepening. So that's a huge worry for the market, the economy. Eventually, it's going to be bullish for precious metals. I'm going to skip gold against the S&P. Of course, the dollar's moving up. That provides some resistance against our sector. Gold against foreign currencies. End of last week, closed at a new daily and a new weekly all-time high. And here's gold. We'll talk more about it in the next slide, but you can see this is the 200-day moving average. And then here's gold against the S&P. So this has been range-bound for, not a perfect range, but it's mostly been range-bound for 3 years. I mean, look at this thing. And we know eventually if this can break above 0.50, that's a huge explosion for gold and precious metals, a positive explosion. And so, again, we're not quite there, but if we're looking at these developments, the 10-year yield, this thing keeps moving up, hurts the stock market here, gold strengthens, and then eventually there's a tipping point where it hits the economy, the market senses recession, and then the Fed is going to have to go back to doing aggressive rate cuts, and they have a lot of room to move and cut rates. And that could be the point, although maybe you see this ratio break out before that happens, before the Fed. The market will do it before the Fed. So again, this ratio could break out right before, or if it breaks out, that's probably a signal that rate cuts are coming. And so last thing, let's look at gold in nominal terms here. So this is gold against the S&P. Again, it's trading in a range. It's been in a range for 3 years. Here's the major breakout, 2100 support. Here's support at 2500. It's holding up pretty well during this correction. These are the net speculative positions. We're at 279 right here. I didn't want to put in too many annotations on the chart. But gold closed at the end of last week, 27.25. When I said, maybe there's some more strength here. I mean, you do have resistance here and resistance at 2,800. Maybe we could get a little more buying before we make another top. But this is now significant resistance on the daily chart, 27.25. And we do have good support here what is this, 2550 or maybe a little higher. Where's 2600? There's 2600. So 2550. I mean, that's good for now. That's a good support level. I could have put in a line here. What is that? 2670, 2660, or 2560. So that's support. And if this thing backs and fills like this, here's the 200-day. It could make some kind of move like this. Again, gold just backs and fills for a while. Comes down, tests the 200-day, backs and fills some more, trends up. Economy downturn, recession, Fed cutting rates, boom, then it's off the page. Okay, you can't see it. So those are my macro thoughts for this year with respect to the markets. Big focus on the 10-year yield and interest rates. And again, if there's one thing to take away from this video and all my droning on here and babbling, we're 11 minutes in, is watch the 10-year yield. Watch long-term bond yields. Because when those things peak and reverse, that is going to be a nasty signal for the economy and the stock market. And maybe the stock market's already discounting that as the 10-year yield keeps moving up to its eventual peak. But that's the major thing to watch for this year. That peak and reversal. And again, given the state of the economy, how it's pretty close to recession, there's lots of warning signs. I think that's going to tip the economy into recession. So that's what we have to watch for this year. And gold and precious metals will really, really benefit if that all comes to pass. Thank you so much for tuning in. Let me know, leave a comment. Let me know what you think. How are things going to progress this year? Where's gold going? We'd love to hear from you. Again, thanks so much for tuning in. Hope you have a great week, and I'll talk to you guys in the next video.